Welcome back. This is part 2 of the insurance video. We're going to start talking about home and property insurance. So just like it sounds like, homeowners insurance is for the home, and it falls on the property piece of insurance. House and other structures, that's what it covers. Damage to or destruction of your house and garage, tool shed, gazebos, trees, shrubs, and plants. The details of what's covered and what's not, that'll be in each policy. It may vary from state to state. Just be familiar with what's covered and what's not. Additional living expenses. Let's say there's a fire and you have to live at a hotel for a while or something, whatever it is. That could be additional living expenses that you incur while you're trying to get your home back. Or if the house is completely destroyed, your transition period. Again, policy will specify what, how, and when. Personal property at home or while traveling. So personal property floater, high value items, household inventory with documentation. Be advised that having a home insurance policy typically is just the structure, not what's inside. You may have to add coverage or get a different policy for your personal property. Personal liability and related coverage. So you got some medical payments coverage for minor accidental injuries on your property and minor injuries caused by you, family members, or pets. Now, this is not necessarily negligence like we spoke earlier, but if they get injured in your home, you might still be responsible. If visitors, guests. Most homeowners policy provide basic personal liability coverage of $100,000 or more. Of course, like everything, I'm assuming 75 years ago, it was a lower number. Now that's the common number. It may go up, and also has a lot of other issues like state mandated minimums and stuff like that. Umbrella policy, also called the personal catastrophe policy, supplements basic personal liability coverage, typically $1 million or more in liability coverage. This is an additional piece to cover you at a larger amount in case you have some kind of personal catastrophe happen. Another way, this personal liability coverage, if you get sued, this allows you to have a much higher amount to cover you. Personal liability and related coverage, specialized coverage. Homeowners insurance usually does not cover losses from floods and earthquakes. That will be separate, typically. So you may need then another flood insurance policy on the side, and I'm not going to lie to you, those are pricey. But if you want to buy the home, the mortgage company more than likely will demand that you use that. Earthquake insurance can be obtained as an endorsement, addition of coverage to homeowners policy, just like the flood one is additional. Anti-concurrent causation clause gives insurer the right to reject your claim if your home is damaged by several factors at the same time, such as wind and rain, because they're unable to determine which factor came first and caused the damage. Just what it sounds like, it's bad. It's bad. And you have heard the horror stories when insurance companies don't want to cover. And not to say they're evil, but if they have a way to not satisfy a claim, they will. Renters insurance. Now, let me make another detail on that. It also depends on the way your policy is written, but be careful. This is just not the only one. There's other thing called like acts of God, all kinds of ways they can deny a claim. That's just one of them. Renters insurance, protection against financial loss due to damage or loss of personal property. just what it sounds like. If you're not buying your home, but you're renting a place, but you still want to have insurance on your property inside the place, you can get that. So look for policy with full coverage rather than the core insurance clause where you have to pay for potable loss. Core insurance clauses are less common, but they do exist. Just make sure you got full coverage. It's typically preferred, but it really depends on your insurance needs and how much, what's your net worth, etc. Claim settlement method, actual cash value. Payment you receive is based on the current replacement cost of the damage or lost item less depreciation. So this is something you always want to talk with your insurance company about the policy, because you have the replacement cost, but sometimes people want, they have the opportunity in order to pay a little less on their homeowner's insurance, like the mortgage. The mortgage is only interested they're going to recover their money. So there are situations where you can get insurance as long as the amount owed to the bank is covered. So the bank says, I get my money, that's it. And it declines over time because you're making payments on the mortgage. So that would just mean that you get a lower payment. Now that's less common, but you always want to make sure that you understand that if you're getting replacement value or not. Or replacement value, you receive the full cost to repair or replace the damaged or lost item. Depreciation is not considered. So this is a replacement type, but there's a depreciation thing. So it's actual cash value. Replacement without the cash value part, it's whatever it costs to replace it. That's going to be more expensive. And then you have the other piece that I talked about where you just insuring the minimum necessary for the mortgage to be in place. Not recommended. Factors that affect home insurance cost: location of home, a lot of things. If it's a flood zone or not, what type of weather issues do you get? Are you in Tornado Alley, or are you in places that a lot of hail happens? So it's just a statistical game. They have stats in the area, and that's going to dictate your premiums according to your location. Type of structure: brick house costs less to insure than a wood house. Now, you would think, okay, is it because the construction is cheap or not? Well, a wood house may have higher risk that if it burns down, it's going to go all out, while a brick house may still be, may not get as much damage. But also the type of structure and how much does it cost to replace it. But the structure itself has different risk factors. Coverage amount and policy type. Deductible, as mentioned before, affects the cost of insurance. So a high deductible lowers your monthly premiums. A low deductible increases your monthly premiums. Okay, so reducing home insurance costs. Home insurance discounts. So if you put alarm systems, smoke detectors, fire extinguishers, if you're a non-smoker, if you insure your car with the same company, all kinds of ways you can get discounts. Company differences: compare cost, coverage, and service. Of course, comparing costs is important. What do they cover? The policy. You really want to compare apples to apples. Consider how claims are settled. Now, and check customer satisfaction index at consumer reports. Those last two bullets are very important. There are plenty of companies that can give you like a really low rate, but then if a claim happens, it's almost impossible to ever get a dime out of them. So be aware that the cheapest insurance may also mean that you're not going to get your claim settled anytime soon or for any amount of money. And they will find every which way not to pay. So it's one of those, you get what you pay for. Just be aware of that situation. We're gonna stop this part of the video here and we'll continue on the next one.